The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 11th, fabulous Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right, if you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us today. You and I, we get to go look at the circumstances of the bulls and the bears, the buyers and the sellers. We're going to go figure out what they're communicating to you and I just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here, but more importantly, I am here to serve you. So feel free to pick up that phone. Dial on in 877-927-6648. Internationally, 727-445-1044. Would love to assist you in any effort in trading and investing. So let's go ahead and get this show kicked off on this fabulous and fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 177 points, trading at 17,173. S&P up 24 points. She's trading at 2,013. NASDAQ Composite up 56 points. That's trading out at 47.19. Russell 2,000 up 15 points, trading at 10.79. Gold's back $12 right now, trading at 12.60. Silver is up 8 pennies, trading at 15.62. Light sweet crude up 86 pennies, trading out at 38.70. So we'll take a look at that. Natural gas up a tad. A few questions from listeners and from clients that came in just prior to beginning the show out here. So we're going to go ahead and just really go straight into those questions, and then we'll work our way back to the markets out here. So the first question that came in, well, the last question, I should say. So I guess I'm doing this in last in, first out order. But the last question that came in here from subscriber Rob, he is in CVX, Chevron Corp. Been in the trade for a bit of time, so let's go ahead and put the Chevron trade up here, and I'll summarize what the question is. So we got in this trade around the 82.90. Well, at 82.90, it's trading out at 94.36. So number one, congrats on the trade out there. Number two, he had initial target. His initial target was this group of highs out here from back in the December timeframe. A logical place to be looking, right? The previous swing point. And of course, now at the end of December, pretty tough to figure out what the real volume should be. December 17th, maybe at about 14 million shares. As price was coming into that level, though, 19 million shares. So he made the correct call, didn't exit the trade. He adjusted his exit to a higher level. What did Rob do? Right now, he's taking a look at this swing point out here from the trading session of November 3rd. So he's just been continuing to increase his stop. Original target was 94. You know, it's in that area. But he's now saying, hey, can I get more out of this? Because I see that this thing is trading into the candle session from November 3rd. The low of that is 95.42. The high is 98.64. And the question is, because all of my clients use a position size calculator in order to, because there's nothing more important than position sizing in trading. And part of position sizing means it's really controlling your risk. You see, every trade that you put on, you should only be risking 1% of your working capital. Now, that usually people don't necessarily totally get that the first time. How can you make so much money if you're only risking 1%? That's the stop. That's how much risk. Risk is how much are you willing to lose on a trade. On $10,000, you shouldn't be, on a $10,000 account, you shouldn't be willing to lose more than $100. On $100,000, not more than $1,000, right? So 1% out there on your trading capital. Once you know what your risk is, then it's just a matter of figuring out your stop. And once you know what your stop is going to be, you're dividing your risk by your stop. That tells you how many shares to buy. It is not complicated. But then you got to figure out, well, what is your stop going to be? And that's where people typically go askew here. Because in volatile markets, where you have markets that are making big swings, we certainly saw that yesterday out here, people will say, I'm going to make a tighter stop. The absolute incorrect thing to do. Why? Because on volatile days, volatile sessions, the market basically, every stock, every indice has an average true range that it moves from top to bottom. We might think we're able to go ahead and pick the exact bottom to sell, but it doesn't always work out like that. It usually doesn't work out like that. And so you want to have actually a wider stop. But the first thing, at a minimum, you don't want to be right on the trade and wrong on the stop. You should at least know what the average true range is. I just used the last 2 weeks. That's a pretty good average out there. And we go ahead and make a stop tighter than that. So what Rob is doing right now, he's making the assessment, is it worth me going ahead and staying in this trade when my new target is 98.64 versus the average true range inside of CVX? He says the average true range is about $4, I believe. It is. Maybe that's the average true range times the 1.618, but he's got $4.40. So we're at $94. It's really a 1-to-1. Do I want to risk $4 to maybe gain $4? And that's why he's asking for some advice for us to look at it. Now, here's what we also know about Chevron. Just as he had made the correct call as price was moving up into the previous swing area, it was doing it with volume, 19 million shares. Today, we're at 9.4 million shares. Now, what I don't know is volume going to go ahead and keep up on this average pace as it has during the last 3.5 versus the next 4 out? Well, what do we got here? The next 3 hours of trading out here? I don't know. This equates to, if we just use straight line math, you take 9.3 million shares, divide it by 3.5 hours times 6.5, you're going to get to 17 million shares. So it has the possibility it's moving into that swing point with 17 million shares. The first thing that I would say, Rob, is if we just take a look at Chevron, as long as this closes inside the swing point, 95.42 is the number, you are, is that the low? Let me make sure here. 95.42, then you would want to say, yeah, let's go ahead and stay in the trade. Improves your chances that you're going to at least get to the top of that level, which is the 98.64. If it rejects it, because you're also, meaning if it closes below that area, the message there isn't like the move is over. In fact, if you're moving into a swing point with volume, and here we've got similar volume, so it's not light volume, but I don't know what the end of the day volume is, so you'll want to take a look at that. Even if you close below 95.42, says, hey, you can still go back up there and test that level. Now, here's what it's also doing today. That's a nice piece of information for you. It is now trading above its weekly TAS market profile, and that's priced out at $93.93. If you see it close below that level, then as you're suggesting, maybe it's time to go ahead and take your profits off the table. I can absolutely see that as being a play out here. Maybe you just take your principal back. And you take a look at this as being a longer-term trade because you're coming into a swing point here. Again, that's the November 3rd area. And your new possible target inside of this equity is going to be an A to B equals CD to the upside. If that $98 level gets to, I got to grab the right area. If that $98, we'll give you the exact number here again, that $98 area gets taken out with volume, then what you've got is a new target. 98.64 is the number. Meaning if you get above that, look, you can get above it with light volume. I'd like to see it take that on with volume, such as today's. Then you could be targeting 104 to 112 out here. But we're not done analyzing this. We got to take a look at light sweet crude and see what it's doing as well. This is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 189, S&P's up 25. So let's go back to Chevron. CVX is the ticker symbol. So we already identified that we're coming into a swing point, daily swing point with a similar type volume. You're up above the weekly profile high at this peak. There may be a larger A to B equals C to the upside, giving us price projections of 104, maybe 112 out here. You know, there's a smaller A to B equals CD pattern out here that's already confirmed. So let's go see what that pattern gives us as a setup. That's where you're going to use this hammer candle down here from the trading day of January 20th. That's going to be your A point out here. Your B point is on the trading session of February 22nd. Makes a retracement, shallow retracement here, about a less than a 50% retracement. You're already coming into that 1-to-1 level at 97. This has got 101 to 106 written all over it. So this says stay with it. If we switch over to a weekly chart, or at least try to stay with this trade, if we look at the weekly swing point that we're coming into, so the same one as the daily, so that makes this really nice for us. I will turn off the profiles, so we don't need those on our chart any longer. We know that we're above any kind of resistance zone as we speak right now. You got the swing point that began on November 2nd. That had 64 million shares, 64.6 to be exact, and you're already at 64.2. So you're coming into a weekly swing point with volume. This really suggests to us that that top is going to get tested. So 98.64, I would go ahead and stick around on this trade. I don't see anything here that suggests otherwise. You might get a larger A to B equals C to the upside out here. So then the last element that we'll put in here, the last two things that we'll look at, this way we can kind of kill two birds with one stone. We're going to go back to the daily chart. I think, yeah, I'm going to come back and we're going to go ahead and add light sweet crude out here to the chart just to see the correlation that's out there. We'll get rid of the volume. We'll get rid of the price oscillator out here. And what was I doing? What was the reason to do this? Oh, we wanted to go ahead and add light sweet crude. How about that for a little brain contusion? So now on the bottom portion of this chart out here, we've got light sweet crude. So we can see the correlation for the most part. It doesn't always work. If you take a look at, you saw Chevron moving higher, in fact, into that November 3rd swing point, but we saw light sweet crude move into the downside. But there's a pretty decent directional correlation. We saw a bottom come in the case of CVX back on November 20th. We saw crude, in essence, make a double bottom. Now, this is closing. This is closing price here in the blue line chart, line 9 close at the bottom. So then the last thing that we want to do out here is go take a look at light sweet crude, current contract. Let's go see what it is doing out here, trading at 38.68. I believe that is up above its TAS profiles out here, but let me make sure of that. Give us a moment. We'll put that up on the screen. How did I do that? How did that carry over? Oh, I guess I know how it did. Sorry about that. Now let's take a look at light sweet crude here. That had the continuous contract up. And you can see that, light sweet crude right now is up above 38.50. That means it's really getting back into a level that should be resistance in your 38.69. So we don't have a lot of room. If it closes above 38.50 out here, that would be very bullish. You'd be back inside the weekly TAS profile, the weekly range out here, and would say, hey, light sweet crude very likely headed to 39.61, maybe even 41.82 out there. And so you've got consolidation, you've got which says 43. So I have to say, Rob, everything that we're looking at here suggests staying with that trade. So hopefully that helps you out, and that helps us out by understanding what's going on in the case of light sweet crude. We know the directional correlation between it and the S&P 500. So if light sweet crude is going to continue moving higher, probability would say that the markets are going to move higher too. So that's a piece of information. Second question that came in, I believe, was asking to take a look at natural gas out here. Natural gas has been up nicely the last 4 or 5 trading sessions. 1, 2, 3, 4, 5. If we just take a look at market, so what do we know about natural gas out here? We know natural gas formed a 1 to 2 A to B equals CD to the downside. It has many A to B equals CD patterns to the downside. This one here is coming off the high from January 8th, makes a move down into January 19th, about a 6.18 retracement, a little bit less than that. Back on January 29th, makes a 1 to 2. The price projection was about $1.61 out here, and the actual low was $1.61. So it makes the full price projection. Normally you do something like a 1 to 2 A to B equals CD. The market usually does something different. Well, it has been doing something different. It has been moving higher. If we just simply take a look at our market profiles out here, you can see price has made it right here to the point of control level on its daily chart. So the question there was, and this is an individual that's in the BOIL, which is the ETF, but the underlying instrument for that happens to be, I believe it's the current contract, or maybe it's the next 2 contracts. I don't know what, but if we take a look at what the actual current contract for light sweet crude is doing, this could become a resting point. And what this trader is looking at doing is being able to add to the position. It's not the same question, should I get out, should I stay in, that type of thing. It is, hey, where would a retracement be? If, in fact, natural gas pauses here in the $1.83-ish type area, then your nice pullback would be either back. So there's really 3 levels that you would be looking at on any kind of retracement. Now, I can't even guarantee that it's going to retrace, but that's what this individual is looking for. So the logical areas right now are going to be the weekly POC at $1.75. The other area, the range, the ideal area and range would be a pullback into the 168 to 171 level. If we take a look at retracement areas out here, we'll do that. We'll put that up on the screen. So here's our retracement levels. You've got your 0.618 at about the $1.70 area too. So that seems like the most logical if, in fact, there is to be some kind of pullback. Now, is there going to be one or not? I don't know. What you and I can do here, though, is we can go ahead and shorten this up to our 30-minute time frame. So that's what we're going to do. That's what I'm going to try to do if I can get all of my tools. Okay. So we're going to go ahead and, for the moment, I'm going to go back to the profiles. And I'm going to go ahead and we're going to go look at a 30-minute chart out here. So that'll be the shortest time frame that we'll go ahead and use to assess perhaps what nat gas is doing. So let's change the chart time frame. I know I can get it out to a 30-minute, and let's go ahead and turn on our market profiles and see where we're at. Now, we'll turn price off here because these profiles provide us with a lot of information out here, right? We can see how when the bottom was formed in natural gas, we just kept making new market profiles, new demand, newer highs. We get a little bit different back here at about March the 10th. But ever since then, at this stage of the game, we've got a brand new market profile. We can see that it's pretty equally distributed. It's point of control really right in the center of price out here. So we don't have anything that suggests at this stage of the game that natural gas is pulling back. we do see that on a 30-minute basis, it has found resistance at where it should have found resistance. And so now, with regard to a potential for a retracement out here, depending on the aggression of this individual, you would be looking at about $1.81. That is the bottom of that 30-minute box out here. So at $1.81, because you trade below the POC, maybe it pulls right back to that level of support. If you see a close below 181, then it would suggest you've got lower prices coming at us. Well, you needed to be a genius to figure that out, right? What I don't know is whether or not we would see a new market profile appear. If you saw one that was forming below this existing one, that would say those larger time frame targets. So that's all the information that we have to go with at this stage here. So watch that $1.81 level. That was for Larry in Motown, Detroit City. This is Steve Rhodes with TFNN. Dow's up 190, S&P's 25. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We've got the Dow up 188, S&P is up 25. So the next question here is from Warren in Denver. And Warren in Denver is asking basically for a price level really inside the S&P 500 in order to put on a long-term put position, with the assumption that at some point in time, QE around the world is going to end, and that would create the top, and and end the massive bubble out here. That one is a bit more difficult for me to answer that question. But here's what I can do. Here's what we can do. We can go take a look at some chart patterns out here and try to get a feel for longer term, perhaps what the markets are doing. I say perhaps because I don't know exactly at all times, and this would probably be one of those times. But let's go take a look at where the heck. Okay, so let's look at a larger picture, right? Because the question presumes that we need to take a look at the larger picture. And this is a larger picture of the U.S. You're looking at a screen here that's got 9 different views, monthly views of each of the primary indices, right? The upper left, you've got the Dow. Upper center, you've got the S&P. Upper right, the NASDAQ. Next row, you've got Russell, the NDX 100, the transports, and you've got the Wilshire 5000. You've got the New York Stock Exchange and the semiconductor. Now, with this view here, one of the things that you and I know is the trend is our friend, right? Well, I guess we don't know that. I will say one of the things that I know is that the trend is our friend out here. So this chart, this set of charts, let's just look at what the long-term trend is. Are we still? Now, this is not a set of tools or chart where somebody's going to be able to call the top. That's not. But this is a set of charts to say whether or not we have actually broken through the bottom and a new trend is forming out here. Well, in the case of the Dow, today's action, this week's action, we're basically right back above that trend line. Actually suggests that the high out here, we'll just go ahead and pop open the screen out here. The high back on May, the first week in May, well, this is a month. So first week, how about the first month of May? That doesn't even make sense. Hey, we got daylight savings time taking place already this weekend? I got to fall back and lose an extra hour of sleep that I already don't get? Do I lose an hour? No, do I pick up an hour, right? No, it's not. It's fall back. We're not in fall. We're in spring. Spring forward. Yeah, I lose an hour. Well, that means you lose an hour of sleep too. Hey, look. Here's what we know about the Dow. The Dow did break through that trend line, which was suggesting curtains, especially because the transport had given such an early message of moving to the downside, well in advance of the Dow. But as we speak right now, if the month were to end today, which it's not, today's only the 11th, you've got price back inside the trend. You've got a bullish reversal signal out here. This really just says that the Dow has just been in a larger consolidation. All that the Dow is doing as we speak right now is clearly just been a consolidation, pretty good sized consolidation, by the way. So what the Dow is likely to do at this stage, it's really right up above resistance. It's at least going to go hit that descending trend line, or at least it should hit that descending trend line. If the Dow has anything to say about it, that's what it's going to do. Now, that doesn't say that it's going to do it next week. And if price gets back down below this trend line out here, it says, the Dow has a little bit of uncertainty in it. But its message right now is back inside the trend. If we look at the S&P 500 out here, never broke its trend, never got down to the long-term trend. I'm referring going back to March of 2009. If you're asking in the S&P 500, is the bull market over? The absolute positive answer is no, has not broken its trend out here. If you were going to ask the exact same question of the NASDAQ composite, has it broken its trend? The answer would be no, the bull market is not over. It's just simply been consolidating like the S&P 500. If you're looking at the Russell 2000, this chart right here, has it broken its trend? The answer is absolutely positively no. The bull market is not over. Now, this thing's been consolidating in like forever out here, but it is back. It has not broken its trend. We haven't really seen a close below that level. We can see some resistance overhead, that little descending price line out here. The NDX 100 never broke its long-term trend line. The transports, that's the real clincher here, in my opinion. The transports never broke its trend line. Yes, it made the top early, and that went ahead and eventually got the Dow moving down, but the transports never broke their long-term trend line. The trend is absolutely the friend inside the transports, and we need to see what happens as it gets to the top of this little cone. We've got the little cone. We've got the Get Smart cone of silence out here between chaos, which could be the markets, chaos, and what do they call chaos and what? What was in the Get Smart guys? In any event, the transports have not broken their trend. The Wilshire 5000 has not broken its trend. Price came right back down to it. Where's price headed here? Looks to me like it's headed up towards that trend line. Now, with light sweet crude, and we were taking a look at that earlier, right? If it continues to move higher, move above its profiles out there, which at this stage of the game, it looks like it will, ought to, because of the correlation, 75 to 80% correlation right now, day to day. Light sweet crude closes higher, the market closes higher. And I'm just referring to the S&P 500, or light sweet crude closes lower. S&P closes lower out there. That's in play, so we got to pay attention to that. New York Stock Exchange, now that's the maybe the clincher out here. It is the only indice right now that is trading below its trend line. And take a look at where this thing is trading right here. It's almost trading right back up into that trend. So it is only one indice when we take a look at the U.S. indices right now that have actually broken their trend. So I think the message comes from the New York Stock Exchange, Warren, with regard to what the market wants to do. So that's what we need to key in on. But otherwise, all other indices, if somebody's telling you that the long-term trend has been broken, tell them to get a new charting system out there, because it most certainly has not. Now, trouble ahead. We're going to go from the monthly chart here to the daily time frame chart. And as we take a look at the New York Stock Exchange, you can see we've got this descending price channel. And it's a powerful price channel. And price is very close to the top of that level. Remember, we got to use these a little bit like guidelines, but it looks to me like it still wants to run higher. But what we can see, just like you and I have been looking inside the Dow here for about the last 4, 5, 6, 7 trading sessions out here, we can see that now the New York Stock Exchange today was able to make a higher price high. However, we don't have that same confirming pattern down here with the advanced decline oscillator. We have a lower high as we speak right now. So it says caution out here. The key will be, in my opinion, at this stage of the game, the key will be, is the New York Stock Exchange going to be able to take out this resistance level? If it does take out this resistance level, this has been nothing more than a subcorrection in the larger trend that we have seen going on. How do I just say that? By going back and taking a look at these charts out here inside of the New York Stock Exchange. So if it can get back above that area, back above that descending price channel, it'll likely also get back inside of the trend out there. So I think it's the NYSE that we want to pay close attention to. If we go back to take a look at its advanced decline oscillator. Now, the other thing that I'm paying attention to, knowing that that it is we may get a clue coming from the New York Stock Exchange, is I've also noticed the bottom panel here happens to be the volume oscillator. So I know we've got a higher high. I won't have the volume to the end of the day, but if it does not take out the high from the trading session of March 8th, volume-wise, we'll have a cautionary signal both in the advanced decline oscillator as well as the volume aspect. That I don't know if we're going to have it in the volume or not. I just won't know until, well, probably sometime tomorrow morning. I hope that helps you, Warren. It may be up at the highs where you would want to sell this thing. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 179, S&P is up 24 points. So we talked about the New York Stock Exchange as being the only real indice chart out here. We've got some trend issues. It's trading below the long-term trend out here. There are a couple other patterns that we want to make sure that we keep an eye on. We have been talking about this till we're blue in the face. We're still blue in the face out here, and that happens to be the daily contract for the NASDAQ futures. Now, it's rolling over out here, but I still need to use the old contract because it's the one that has the best market profile data for us. And we can see that you have that nice little up thrust bar here on March the 1st. We've just simply been trading with inside that bar out here. I said we would give it till I think today to give us that rising 3 signal, that momentum, and it was going to be able to get above the resistance zone, but it hasn't as we speak just yet. Maybe coming into the close, who knows? But the number we're watching for is 43.58. You see it close about 43.58, and that would be a positive for the markets out here. But at this stage here, the assumption is that it's not going to be able to do that. Now, so you've got this chart. Why are the other futures contracts, I'll switch, why have they been able to take out their highs? Now, this is going to show the current contracts out here. Why have they been able to take out resistance zone, move higher? Well, the Russell 2000 hasn't. And not that we're not concerned about it, but the ES Mini has, the Dow has out there, but the NQ hasn't. And that always makes us suspicious. Now, this is where, before when I was answering Warren's question in Denver, he's looking for the bigger, longer-term picture out there. And that's why we wanted to focus in on the monthly charts to see what they were communicating to us. Now we start talking about daily, total different time frames out here. So we have this that is a little bit of concern to us. You can see here the current contract, the weekly profiles, for the June contract, way different than they are for the March contract out here. Here's the other chart that should have us, at least one other chart that should have us a bit concerned. It's the NDX 100. Now today, it did gap up, meaning above yesterday's close, but you still have a little doji candle up towards resistance. And now we don't have a price relative strength divergent pattern. I don't even know if one could actually form Let me see here. Now, one couldn't even form out here, so that's not going to be an issue because that called the last top as well as the last bottom out here. But if we do take a look, we could be in the presence of a seventh wave move to the upside out there, and we'd want to be careful. Now, you've got a 1-to-1 A to B equals CD price projection inside of the NDX that says 44.34 could be the target out here. But we'll watch this pattern along with the NQ out here. You know, if we take a look at the NQ chart, let me switch back over to a different set of charts. We want this one. And I look at short term, what's going on now. Short term, we're going down to like a 30-minute time frame out here. The 30-minute time frame, you know, we talked about that hammer candle yesterday, remember? Just at about going into the very closing session. Yesterday we said, okay, as the market was moving down, the NQ was giving us a message that it was just trying to establish a bottom. Remember, bulls and bears, they can't hide. Their job, their role is to go ahead and paint signals for you and I. Not smoke signals, signals that are really worthwhile for us to pay attention to. We had that nice hammer candle. The following half hour, you know, we had the market just kind of move sideways and then a nice big old bullish engulfing candle. So we knew where the buyers were present here. There was no guessing where they were. We also knew if there was a close below that low, if you were long, you're wrong out here. But we knew, we could very clearly see on our charts where it was that buyers were taking their position. And voila, they did. If we look at the 30-minute chart, there's nothing negative here. Well, let me make sure I'm looking at the current data. There we go. There's nothing negative here. In fact, the last profile box that just formed as we came on the air, slightly higher, says it should have supported about 43.20. I closed below 43.20. Maybe there's something else that's going on, but the 30-minute chart looks okay for the NQ. If I take a look at the ES Mini contract out here, the ES Mini was able to get past any kind of concern it had as price was moving higher, doing it with less relative strength. It was doing that into 11 a.m., but at 11:30 it said sayonara, adios. I'm moving higher as it did. Now, in the case of the ES Mini on its 30-minute chart, right now a little bit, just perhaps a little bit weaker than the NQ. We can see that price is trading below the bottom of its box out here, which is right around the 2004 level. And that could be an important message. Why? Because this box is set up with buyers in control. Now, because this is such a brand new contract out here, let me get doble ghee, as we say in the trading community. Let me get a double confirmation. Yeah, we got a double confirmation, so that box is correct. And the reason why I wanted to look at that was because of the following. Give me a moment. Remember, nothing more bullish than a failed bearish pattern, and nothing more bearish than a failed bullish pattern. If we take a look at these market profiles out here, take a look at this last set of profiles, point of control closer to what? The bottom of the box. That says that this should be a strong area of support. And if, in fact, as we get towards 2 o'clock, another 12 minutes from now, there's a close below that, says maybe a little bit of trouble inside of River City. Where does trouble take us back to? I'd probably go take a look at the longer. Let's go take a look at the 120-minute time frame chart and see what is present inside the ES Mini. Oh, the ES Mini says, hey, may not be so bad at all. May, in fact, just go ahead and find support right at the top of its weekly profile box. See how that point of control here closer to the bottom? Big important message out here with regard to what the ES Mini wanted to do, as it has done today. Now, this says that it's got support right at about 2009 and 3 ticks out there. So we'll see if, in fact, that's where the 30-minute chart here finds some support. Pretty good chance, odds favor that it will. And that is what's going on inside of the S&P futures contract. So what else should we go look at? We've covered the longer-term picture. We've covered light sweet crude out here, natural gas. Let's go look at some individual stocks. That would seem like something to do out here. So where do we want to begin? Let's go take a look at what's moving here. Let's go see what's moving to the upside with conviction. Well, you got Alta Salon. There's no question that that's moving up with conviction. We'll take a look at it anyways. When I say anyways, don't know that we need, but let's go see what it's really doing. $26 and change, 4.7 million shares to the upside, taking out a swing point out here that only had volume of, well, we don't know. I've got to turn on the volume panel in order to be able to figure that out. There we go. So as we take a look at it, it's taking out a prior swing that had volume of, let's get our data box so we can see it, had volume of 778, 4.7 million shares. Yeah, I would say that's taken out a swing point big time. And the stock looks pretty good. Let's put this on a weekly chart since we're coming to the end of the week out here. It has been a great week. Let me just delete this, and it'll get rid of that little problem there. There we go. Okay. So Alta Salon, man, back in good standing. This thing, the heck did I just do there? This thing must be back in the IBD 50 out here because this looks really strong. So as far as where it's headed to, I don't know. I mean, you got another A to B equals CD to the upside. Looks like it's confirming that today. That weekly swing had volume of 6 million shares. You've done 13 million. So the ABC price projection on Alta Salon looks like this. Your A point down here in August of 2015. Your B point out here in December of 2014. And your C point down here in February. So 1-to-1 says about 214, maybe 233. Steve Rhodes with TFNN. Dow's up 185, S&P's up 25. I'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back. Dow's up 193, S&P's 26. Individual stock-wise to the downside, not much out here. It's mostly ETFs that are showing up on my screen out here. You do have FXCM. You've got Genesco, and might have been one under. Credit Acceptance Corp of Michigan. The only stocks that are trading to the downside. So most everything here to the upside. Priceline, let's take a look at Priceline. Up $27 right now. Get a feel for what Priceline might be doing out here. Now, Priceline is, market profile-wise, everything looks good there. So no problems there. It's always easier to look at clean charts when we want to. Priceline has certainly a downdraft area that it's trading into that had big volume of 2.6 million shares. So price could stall in between this 1303 to 1386 level here for a while, but it looks more likely than not that Priceline is going to try to make a run for that 1386 area. PCLN, the ticker symbol. You got BlackRock up $11. That's up nearly 4%. BlackRock is moving into a swing point. It's not there just yet, but it's moving towards that swing from back on the trading session of December 29th. That makes it really tough to figure out gauge volume. 480,000 shares versus 447 today, but probably headed towards resistance as well. We had this had gapped down back at about 342 level on December the 11th with 1.6 million shares. So this ought to begin to start stalling out here, but no other real resistance until 361 other than this 342 level. So if it can clear 342, BlackRock ought to make its way up to the 360-ish type area. Let's see what else we have trading to the upside. You've got Google's up $10. Let's take a look at Google, see what it's doing. This is taking out a swing point today, or attempting to. So the swing point is from back here on March the 2nd. That had 1.6 million shares. You've done 1.1 million shares. So it seems like it's doing enough. Let's just put it into the old calculator. 1.5. And it needs to clear, what is that, 1.6. Maybe a light volume. It's going to be close. It'll be close inside of Google. But nonetheless, let me just take a look at profiles, see what we've got. It says it ought to move up to 735, maybe 762. And I think we're going to have an A to B equals CD pattern that gives us that, well, maybe it gives us a larger price projection for all I know. This would say, so it gives us right in that range. So pretty good chance that Google is headed to the 742, 757 level out there. What the heck is Apple doing? Let's see, 101.89. Get some type of feel here. Apple is trading into its swing that had 46 million shares. You've done, whoa, nobody buying Apple. Nobody buying Apple, 15 million shares as it moves. So what Apple's going to likely do, and one of the reasons why I'm sure we're seeing some of the stalling pattern inside the NDX 100 out here, the Qs, because there are no buyers. It's hard to say there's no buyers in the Apple store. Every time I walk past an Apple store, there seems to be plenty of buyers, but there are no buyers of its stock. Likely to run into resistance at the 104 level is the way that this is trading out here. Lastly, so I don't know. So where do we want to leave this thing? The issue that we'll be contending with is going to be that New York Stock Exchange. I think it becomes pretty easy to see if the New York Stock Exchange, and it's not today, it's Monday, Tuesday, whenever it might be, we're going to find out if, in fact, this descending trend line, if this is really what is going to control the direction of the next move inside the markets. Likewise, you break out above the descending trend line, and that's got to make you say, something to think about. Folks, thanks so much for being here this week. Stay tuned. Our man David White, our polar bear, is going to be up next. And then we got the Tom O'Brien Show from 3 to 5. Have a great weekend. Look forward to seeing you on Magnificent and Marvelous Monday. Take care, folks.
Larry Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.